All right, this is Obeyed on behalf of V Electronics, and in this video, we'll be talking about price floors and price ceiling. Okay, now when it comes to your price ceiling and price floors, these are government regulations. Okay, they're basically rules that um, apply on suppliers. Okay, so when it comes to suppliers, okay, they can only raise their prices up to a certain extent. Okay, and that has to do with your price ceiling. Okay, when it comes to price floor, okay, this has to do with things like labor, for example. Okay, so your employment rate cannot go below your minimum wage. Okay, so for that reason, let's go ahead and draw what this looks like over here. All right, so say for example, you have your supply curve. All right, and we know that this is price and this is quantity. Right, so as the cost of producing a product goes down, okay, this supply goes up. Okay, not to mention, as the price of a product goes down, your demand goes up. And here you have your equilibrium. All right, now if the government was to set a price ceiling, let's say, for example, on housing, okay, if you have a city that has a price ceiling on housing, well, especially rentals, okay, what's going to happen is the landlords in that city won't be able to raise their prices above a certain price. And that price will be a price somewhere over here, for example. Okay, so this is the price ceiling. Okay, and the landlords won't be able to raise their prices above this price. Okay, the price ceiling could also be at the equilibrium. Okay, where supply meets demand. All right, so this is your price ceiling, for example. All right. And what they mean by price ceiling again, okay, you cannot raise your prices as a supplier. If you're a landlord, you cannot raise your rent, okay, over a certain rate, okay, which is acceptable by the government in that city or the um, officials of the city in that city. All right. Now, when it comes to your price floor on the other side, okay, your price floor, say for example, this would be, okay, down over here. Okay, and let's assume that this is your quantity demanded because this is your demand curve. And let's assume that this is your quantity supplied. Okay. And the price floor will stop the prices from dropping. Okay. Beyond this line over here. So it's sort of like your stock market game. Okay. So if you look at the stock market, okay, you have the peak and the trough, right? So the stock goes up and down, up and down. Here you have your peak. And at the bottom, you have your trough. Now, as a stock investor, okay, when you have to decide between a peak and a trough, what you're going to do is use options. And what I mean by options is you're going to take profit or take loss. All right. So when the stock prices go above a certain point, okay, let's say it reaches this peak over here, okay, the per share price, the per share price, okay, let's say it reaches this peak over here. And if you do take profit, okay, basically it will sell those shares at this point, okay, which means it doesn't really matter if the stock prices go any higher or if they fall. Okay, as long as it reaches this point, okay, this would be sort of like a price ceiling. Okay, you cannot move beyond this point. All right, when it comes to your price floor, let's assume that this is your trough. Okay, you cannot go below this trough. All right, so this is where you take loss. Okay, because the prices are falling in the stock market. Okay, whether it's the oil price, okay, whether it's anything else. All right, so if the prices fall, you cannot go below this point over here, which is your trough. All right, and this is is where you take your loss. And this would be similar to a price floor. Okay, now if you look at the demand and supply curve over here, okay, often what the government does is that they set the price floor above the equilibrium point. Okay, so what they'll do is they'll set the price floor above the equilibrium point, and when they set the price floor above the equilibrium point, what's going to happen is, okay, the supplier will produce excess of supply. All right, so there's going to be a surplus because of the price floor. Okay, and this is commonly observed, okay, in the agricultural market, okay, where the farmers may end up producing more because of the price floor. Okay, and in that case, the government might be willing to buy the surplus from the farmers, okay, using things like subsidies. Okay, so the governments may provide subsidies. Now, as long as the government provides subsidies to farmers, okay, as long as they buy the surplus from the farmers, what they will do, okay, is provide a profitable venture for the farmers. Okay, so that way, okay, it doesn't matter if it rains or not the next year, okay, the farmers can still continue with the profit they made from last year. All right, so in that case, okay, the government is helping out using a price floor. All right. So apart from that, okay, this is Obeyed on behalf of Electronics. Have yourself a great day.